Hello, everyone. Welcome back to Shine's Room. May I please have a mic check, webcam check, please? All good? Can hear me? Audio, no video? Let me try to restart that again. No, I got it. Let's see. Did that fix your problems? Easier if one person restarts than the entire room, right? No Speedos? Nah, I got my short sleeve shirt on. Not you, you'll restart? Alright. We'll give Doug we'll wait for Doug. We love Doug. Family-oriented community. If you guys need a restart, just feel free. Go ahead. We're going to be talking about some interesting things. I'll get into it momentarily. We're going to talk about the triple Qs and basically what they've been doing recently. And I'm just going to throw up the type of patience that really needs to be exercised in a market like this, because everybody is afraid that they're going to miss the rally, they're going to miss the drop, and traders are getting squeezed left and right. Hence why I guess my strategy really shifted into really wanting to see more names. You know, I really wanted to see more names. Nice trade there, Pete. I really wanted to see more names and pick them more finely, really sift through the sand, if you will, to pick out some of those hidden gems. And I did have a bunch of varying positions here today. One but not least here, EDU was, even though not my most profitable position, definitely my favorite play of the day here. And we were looking for that hourly break. And where's my last sell there in EDU? I have a 1301 sell in EDU today. That wasn't obviously for my entire position, but that was my best sell up there. And I basically got rid of it. I still noted it was a bear flag pattern. I still noted it that overall it was weak. But that does not mean that you can't get a bounce. I know when the stock was trading at $10, we talked about the stock going up 25% in value and still being weak, and that's exactly what EDU did today for us. You had that beautiful pop here through 1152, and it started climbing higher. I murdered the trade. My best trade was a Walgreens pre-market trade. Was a rather heavy short there. The volume was definitely there in the pre-market, and I was heavy, and I was down 22 cents in the position at one point. That was down $2,200 off of my P&L, but then the stock proceeded to just plummet, and I just milked $8,000 off of it. So that was by far my best name of the day, and nothing on this chart could really show it, what was happening in the pre-market. But I have been having a lot of success recently in the post-market, as you know, as it really feels like if I'm going to take, 200 to even 3,000 share positions, that I could set a hopeful tight stop. However, there is a lot of slippage there, and that wasn't really the purpose of what we're getting into today. So let's just get right back with what we're seeing right now. We're going to go right here to the triple Qs, and we're going to take a daily look right now. You see what's happening right now in the triple Qs as it begins to wedge and just tighten up here. All the traders saying, oh my God, this is the breakout level. You're right, this is the breakout level. 65.31 just slammed into that level today, perfectly right there in the triple Qs. I highlighted it with the yellow lines just to discern what type of analysis I'm using on this particular setup right here, and you do see the triple Qs having trouble breaking through. We broke the high. That was your resistance. Remember, we were talking about 65 and a quarter on your triple Q, 65.26. Watch for resistance there. We blipped 65.31, perfect storm scenario. We digested to the downside. So it was a very interesting move there in the triple Qs. And what I'm going to discuss today is really, I don't really think it matters. I don't really think trading in the post or pre-market is for everyone. In fact, I would say it's probably for the least amount of traders out there. However, the mentality behind trading in the pre-post market, during market, whatever you trade can be defined by the following principles that helps me make money in this market. So what we're going to talk about today is really the 5 things that successful summer market traders do, things that they put on the agenda. And you could tell by the picture that I used right there, she's obviously, she obviously trades size. You could just tell right there. And we're going to talk about the 5 things that people and traders do to be successful during the summer, and I'm going to share my thoughts on them today. So hope you guys enjoy this seminar, and if you know these things already and you just don't like my face, you could, stop the webcam, hide the children. We're going to start off here. Let's start off with self-discipline. One trait that's most often mentioned by traders themselves as being the single most essential ingredient of successful trading is self-discipline. It is one common trait exhibited by every good trader, in my opinion, and it's the catchphrase of every tutorial, seminar, anything that or book, anything that you'll read regarding to this matter. So what exactly is self-discipline? I define it as training to act in accordance with rules, and you develop a regimen that develops or improves the skill. In trading, you must first discipline yourself to learn everything you need to know about trading in the markets. Then you must discipline yourself to create your own rules and trading plan, and on a daily basis, you must discipline yourself to follow the rules that you've set forth in your plan. Mercifully, for all of humanity, self-discipline is not a talent. It can be learned by anyone. You want to look at your dog? You think your dog learns self-discipline? Dog feels like crapping on the floor, but then it remembers how much you yelled at it last time it did so. So it holds it in. That is self-discipline. Want to know what else self-discipline is, besides for a fecal analogy? It's a process of learning how to take conscious control of your actions, of operating outside your belief system in order to effect change upon a belief that may be standing between you and your goal. In a very real sense, self-discipline is like a muscle. The more you use it, the stronger it gets. Learning self-discipline should be the main goal in your endeavor to becoming a successful summer trader, because now is the time where, if you're able to exercise it now, when the winter months come again and trading tends to be better, historically speaking, during those times, you will have developed your muscles. It's like you're going to a weightlifting competition in 8 months. Who do you think is going to be better prepared? The guy who's sitting there doing bicep curls, or the guy over there saying, yeah, I could bench press that easily? Think of it like that. So that is self-discipline to me. We're going to move right on along. We're going to talk about mastering your ego. When it comes to trading, your ego can be your own worst enemy. The reason is that it can prevent you from taking responsibility for a losing trade. Most people don't like to admit that they're wrong about something. You'll see that in general from every aspect in your life. Look within your own family, look within your friends. Of course, nobody likes it, and then many have a distaste for admitting being wrong about anything. So an oversized and unmanaged ego can compel one to great lengths in order to keep from admitting this error. Nonetheless, it must be realized that being wrong is part of the trading game. This holds true for all types of investing. For the investor without any experience of any longevity has ever been right with each and every decision. Even successful traders are wrong 50, 60, 70, 80% of the time. You will meet those individuals as well. They can be wrong most of the time and still be successful because they keep their losses small and they let their profits run. That was sort of my mentality today, mastering your ego. I tried to let my profits run, and just utter honesty, it failed for me like 3 weeks ago on a day, and it just worked beautifully today, the same exact strategy. So knowing when to apply your strategy and where to apply it is a very critical factor as well, which is why I've been really, really heavy, but in very few names. I don't want to be holding 500 of that, 1,000 of that, 1,000 of that, 500, 500, 500, 500, 500. By the time I'm done, I have 13 positions on with tight risk reward, and I'm trying to jump in between all of them. All right, I sold this one here. Okay, I got stopped out this one here, and I just continuing to trade. So mastering your ego is a very important factor for successful summer traders. The next thing I'm going to talk about, right under the smiling girl, is keeping an open mind. So what is that synonymous with? Okay, an open mind is synonymous with mental flexibility. It's a common strong point of successful traders. To more clearly illustrate this quality, let's take a look at two different traders. Trader Jim has an open, flexible mind. He approaches the market each day free of any and all expectations. He observes various market indicators to get a feel for what the market might do today. He keeps ahead of the news and tunes into any speech that the powers that might be making around him, but his whole direction is wrapped up in the attitude of let's wait and see what the market does. This is Trader Jim who's approaching this with this mentality. And when the market invariably leads the way he follows, he makes money. If it heads down and the security that he's trading trends downward, he goes short. If it trends upward, he goes long. If he can't discern any trend whatsoever, he stays on the sidelines and waits for a trend to appear. When he makes a trade, Trader Jim sets a stop and lets his profits run. If the security reverses and triggers a stop, Trader Jim exits this trade without any compunction and waits for the next setup. Jim really couldn't care less about being right or wrong, and things aren't clouded. Jim is not jaded. He moves into in and out of market positions with ease and without remorse, cutting any losses short to make himself both mentally and physically available to grasp the next opportunity that comes along his way. So keeping an open mind is a very important thing. Now let's take the trader. That was the trader to your left, and now how about the trader to your right? This is Trader Bob. This is Trader Bob. On the other hand, he has a closed mind, a rigid mind with opinions about the market that may as well be chiseled in stone. He's already decided that the big speech will have a negative impact on the market, so he sits on the sidelines. He remains there as the market climbs against the short because it has already discounted the speech's negative comment and a minor correction the day before. But Bob didn't know because he doesn't really keep a watchful eye. He doesn't care. When he finally decides to jump on the bandwagon of his, his favorite stock, which is trending unmistakably upward, he sells on a minor downtick after a 1-point gain because he still believes the market is headed for a fall, and as a result, he misses the subsequent 3, 4, 5, 6-point rise in the stock that he wasn't able to capture. When the stock tops out and heads down on an intraday swing, he doesn't even think of shorting it because he believes that the only way to trade is to go long. And what does he do on a losing trade? He hangs on to it, of course, while his losses mount because he knows that the stock will finally recover and give him back all of his losses and more. So very important to keep an open mind and just wait and know where technically you stand and what's technically viable for you in these markets. I have two more. Lucky me. Mental agility. We talk about mental agility. When you know what I've noticed, the people who are quick on your keyboard, you think that's physical agility? That's mental agility. An agile mind is closely like an open and flexible mind, but it's not the same thing. You may be open and flexible, but still require a lot of pondering and thoughtful reflection to arrive at a decision. This might make you a shrewd investor, but a terrible day trader. A day trader must be able to absorb and quickly analyze an abundance of rapidly changing data. What's up, people? What do you think I'm here for? Why do you think Shine even talks to me, a psychopath like me, right? Can a person develop mental agility? Perhaps not. The best day traders seemed, in my opinion, to have come from careers that required quick, flexible minds. These people are used to thinking on their feet and responding quickly to the changing conditions around them, such as, you like to fly planes, a pilot, a salesperson, anything that would require, and there's a million other jobs, a quick changing decisions. Doctors, according to one professional trader, make the worst traders. That's right. I have a friend, a trader, a fellow friend, who says doctors make the worst traders. Although a doctor must have an open mind to let the patient's symptoms, lead the way, they're generally so accustomed to being right that they find it immensely difficult to admit to being wrong. So, mental agility, very important thing. And last but not least, isn't it, Peter? Last but not least, we're going to talk about patience. You play poker with it. Those are the people that if they raise you, you could put them all in with just one re-raise. So, right? I play some poker too. Anyway, patience. Let's talk about patience right here. Patience is one of the less heralded qualities of a successful trader. Indeed, it's probably one of mankind's most underrated virtues. It creates the ability to wait for the most opportune circumstances before you act. Patience allows you to refrain from overtrading, from churning, from being in positions that you don't want to be within. It's not easily developed, but at the same time, it's not really a matter of either you have it or you don't. A well thought out trading plan, along with proper disciplines to follow this plan, can greatly facilitate its development within you. So I hope you guys enjoyed this little seminar, a few of the things that we look for in traders and whatnot. And if any of you guys have any questions about anything I just talked about, that would be the time to ask. And then we'll get into chart analysis. But for now, any questions on what we discussed? How to hold the winners and let them run. The people who have trouble holding the winners are people with a bias. I admit I was biased in the past 2 weeks. I was holding a bias. I immediately need to realize that, that bias could still be taken advantage of on, many different scales and time frames. And today, I'm so used to taking the size, but, I'm just so happy, 10,000 shares, I catch, 9, 10, 11, 12, 13, 14, 15 cents, that's usually a trade for me. Today, I just kept looking at the stock and I kept saying, I almost said, why am I going to risk, $800, $2,000, $3,000 if I'm going to try to make $1,500 on this quick trade? So I let it run and work today for sure. Drop your market bias. That's exactly one of the things that I noted, and that fixed it for me. Again, I don't have long-term problems. I identify and I destroy them. Keep an open mind, master your ego, self-discipline, patience, mental agility, and you'll be a successful summer trader, and even more importantly, a successful winter trader, fall trader. Where do I look for immediate news on specific stocks? You guys want to laugh? Shine's Room. That's where I look for my news. I use Yahoo Finance if I need to just look up a quick article, but I don't use any streaming news service. Shine's Room is all I use for my news feeds. All these stocks I find via my own filters that is set up with Lightspeed software, and that's where I find all these plays. I use Shine's Room. I mean, we have look, I'm not going to call out anybody's name, but what, you don't think we have like Bloomberg terminals all over here and specialized news services and whatnot scattered across the board with active participants? This is more news than I could ever digest, and this is more news than I can ever want. For me, this is the news service that I use, Shine's Room. And I don't watch anything. I don't really watch the spiders, to be honest. Here and there I dabble a few days. It's not an everyday thing that I look at the spiders. For me, I'm just more personally comfortable with the triple Qs. And again, like, you know, the charts overlapped are identical. You did have a couple divergences, more divergences than normal this year. And I don't trust this market. Again, what do I want to say right here? Look exactly what I drew. If I could just follow this simple technical analysis, say the Qs might have, I'll say this right now. You ready? You ready? Just like I called the top of the market and I was right, and just like I could call this and I could be 100% wrong. If we hold that wedge that you see right up here that I have drawn on the Qs, it banged against the wedge right at 65.30, maybe even 65.31 perfectly as it spiked to day high. Why do I think it's 65.31 perfectly? Look at the volume as you started breaking that trigger level for the first time of the day. Remember that daily trigger through the Qs? Look at this 5-minute volume bar out of nowhere on the triple Qs, just exploded. Stock popped up, the volume died off. This is obviously a bad print right there. And we digest it down. Here's the call. If we are unable to break through that overhead resistance level, it is likely that the same thing will happen in the triple Qs right over here, the previous time we hit that resistance level. Let's find out what day that was. Right here. July 5th high, 65.25. That's why you saw the volume there in the triple Qs as it broke that level. Volume subsided. At the moment, buyers were exhausted. So what does that tell me? It tells me that look what happened after July 5th. We started edging down. Now, while I'll hold no personal bias or opinion, what it will help me do is if I do see the market coming in and I could attack something weak via, puts or calls or whatever, that would be great because that would just be another opportunity for me to attack it in that sort of fashion. So for me, I don't want to hold the bias because if we break 65.31, guess what happens? What do you think happens then? You break it to the upside. You break the pattern to the upside, and you could start testing overhead resistance levels, 66.5, 67 bucks. You start approaching there in the triple Qs. So, very big resistance level. We smacked against it before, pulled in hard. Is it going to happen again? I don't know. But one thing I will do is I will always be prepared for that situation to happen. And I am personally bearish right now. Most of my money was made today to the short side, and just about an equal amount was made to the long side. I have no biases. I killed Walgreens to the short side, destroyed EDU to the long side. Why not? Why not on a day like today? And going heavy work this time real well. Filter setups? Absolutely, Doug. Maybe with maybe send in info@shinesroom.com if that's something you're interested in doing. I'm sure Shine says the word and it happens. So definitely send that in. And if that's something enough of the community's interested in, I'll go over Lightspeed filter setups. It's very simple and it won't be too long. As traders hide their orders, how do you tell if they're more buyers than sellers? More buyers than sellers is a very interesting way of putting it. It could be fewer buyers and a lot more sellers, but the fewer buyers have so much to buy that they spike the stock up. So I think that is a very interesting way more buyers or sellers. How about more shares trying to be bought as opposed to more shares trying to be sold? The truth is, you look at some of these things, it's going to require analysis of the level 2 box. That's ultimately going to tell you more buyers than sellers. The charts are going to tell you areas where you think that there will be more buyers than sellers. That's what the chart does. And when you correlate that within the level 2, that's going to really expose to you how it's all working in together and how those two things correlate with each other. And then you're able to take a good risk reward. But in terms of a stock having a bull flag pattern to the upside, the truth is you never know. You look for the level 2 for signs. You look at your print box to see if they're continuing to just print the offers, because a lot of times when that happens, they just flush the stock down real quick. Walgreens pre-market. Here's where I started opening up short. I started rather small with a couple thousand shares, and then I started building 1,000, 2,000, and I built my position from there. So my best short sold 36.55 right over here. Can't make this stuff up. 500 shares short right by the top there. So it was an array of prices. It's not a position where I say, okay, I want to open up, 10,000 short, and you just put it in 10,000 share offer and get filled. Maybe some ballers do it like that. Me, I tested the water and I wanted to do a reverse tier strategy with 4 tiers. So that's why I opened up with 1,000, then 2,000, then 3,000, then 4,000 to build that overall 10,000 shares short. And that was WAG, not WAS. All right. So